Good afternoon, teacher. Today, as a group, we're going to present the analysis of the Buenaventura Mining Company. The members of the group are Stephany Dodero, Gabriela Peralta, Jose Vargas, Lady Zavaleta, and me, Juan Timoteo. Next, please. This is our table of contents. First of all, we are going to talk about the company. Then we are going to analyze the difference between the report in English and Spanish. After that, we are going to develop of audit accounting standards. Finally, we will tell you some conclusions as a group. Next, please. Next. So, to contextualize, we will mention 4 important data of the mining company. First of all, it is a Peruvian company that produces beautiful metals. Second, the company began its operations in 1953 with the acquisition of the Yulkani mine in the province of Huancavelica. It is the first Latin American mining company to be listed on the New York Stock Exchange. Finally, their principal products are gold, silver, zinc, and lead. Next, please. So, now we are going to explain the materiality of International Standard Auditing 320. Because the company is a for-profit entity, we are going to analyze the profit before taxes, sales, and equity in order to calculate the overall materiality. Then, because the company has operating for more than 60 years in the market, equity will not be the point of analysis. After that, due to the volatility of earning before income taxes, sales will be taken as the base of calculation for general materiality. So, based on the quantity information of Buenaventura Mining, it is determined that the general materiality for the development of the audit analyst is 4,339. It's important to mention that we determined the materiality of planification, that is 3,254. Next, please.
Okay, so after having found the planning materiality, this number was compared with all the accounts in order to determine if there was a correct disclosure or a defect or excess in disclosure. So we conclude that there are 26 accounts that are correctly disclosed. Also, there are 5 accounts that have been disclosed without the need to be made. Since it doesn't exceed the planning materiality. And finally, 2 accounts exceed materiality and despite this weren't disclosed, which is why it's considered a disclosure defect. So I'm going to talk about the difference between the report in English and Spanish. Well, after having reviewed both documents in English from the New York Stock Exchange and the Spanish from the Lima Stock Exchange, we realized that there was only one difference, which is the subsequent events due to the pandemic, and the other that was syndicated term loans. But this is going to be explained later in IAS 10. Okay, so we are going to start with the conceptual framework of financial information. We observe that Buenaventura complies with all the necessary indications to present the financial statement. One on the hand, it complies with Chapter 3 of qualitative characteristics, relevance, and faithful representation because mining concessions, like you can see, which is the most relevant account, has the respective calculation and its node to be analyzed. Also, they have the qualitative characteristics of comparability because they do a comparison of all the financial statements in the years 2018 and 2019. On the other hand, all the financial statements were prepared under the indication of Chapter 4. For example, in this statement, was divided into assets, liabilities and equity, and almost current and non-current. Also, the same procedure was carried out for the other financial statement, but this is going to be explained later in detail by my colleague. And finally, the financial notes were completed for a better understanding of each account.
Now we are going to talk about the accounting standard number 1, which is presentation of financial statements. In the first place, according to the paragraph 51 of the standard, the organization must present the name, if it is individual or from a group, the closing date, the presentation of the currency, and the rounding practice. We can see Buenaventura mentions everything. Here we have the name. It mentioned that the financial statements are consolidated. It presents the closing date. The currency is dollars and it is in thousands. Also, the organization must present comparative information. In this case, it is between the year 2018 and the year 2018. Also, it must also be divided into assets, liabilities, and equity. At the same time, Buenaventura must divide the assets and liabilities into current and non-current. Next, please. Sorry. And something very, very important is not to include deferred assets in the current section, which is what Buenaventura does. Next, please. For the income statement, the organization must present the same in the headings, such as name, whether is it consolidated or not, the currency, the rounding, and the closing date. Also, the organization must recognize all incomes and expenses during the period, and if the expenses are significant, they must be revealed in the detailed notes. Also, the organization must present at least concepts for sales, depreciation, amortization, expenses for taxes and financial expenses and income. Next, please. What is important for the statement of other comprehensive income is that the effect of taxes must be presented for each operation. Buenaventura does it. Also, additional items, headings, and subtotals must be presented. Next, please. About this, the authorized common shares must be also revealed in the notes or in some financial statements. Buenaventura complies with this since it presents a number of shares with their until cost in note 17. Next, please. Okay, about the revelations, Buenaventura must explain the basis of preparation, consolidation, accounting policies, estimates, and judgment as it does it in the notes 2 and 3. Next.
Okay, según la NIC 2, inventarios, según los estados auditados de la empresa Buenaventura, revela todo lo que nos dice esta norma, mas no tenemos una inconformidad según el párrafo 36C de esta norma, que nos dice que la empresa debe revelar los importes en libros de los inventarios que se llevan al valor razonable menos los costos de venta. Esto lo podemos justificar según la nota 2.1, bases de preparación, que nos dice que los inventarios de la empresa se revelan todo al costo histórico. Next, please. Como podemos ver acá en la nota 8 de inventarios netos de la empresa, cómo clasifica en productos terminados, en proceso y los repuestos de la empresa. Y podemos ver que los productos terminados de la empresa equivale a un 2% del total, o sea, casi solo 2 millones de dólares. Y esto es un monto insignificante, la verdad. ¿Por qué? Porque la empresa se dedica a hacer concentrado de oro, plata, zinc y cobre, y cuando termina su producto, ya lo tiene vendido por anticipado. Es por esa razón que se mide el costo. Next, please.
Okay, In relation to the IAS 7, which deals with the cash flow statement, we can be mentioned. In paragraph 110, they mention the requirements and form of presentation of the financial statement. Given this, it can be stated that the Buenaventura Mining Company complies with the format of paragraph 1 and the specification of paragraph 10, such as investment and financing operation activities. Regarding of paragraph 17, it can be seen that the company has short-term loans and leases, so it will be applying the paragraph 17. The company also show its operation, investment, and financing activities. In these ways, it can be affirmed that it applying the direct method with which it will be complying with paragraph 18 and 19 of the standard. The group's consolidating financial statement are presented in US dollars. So in this way, the company are applying paragraph 25 of IAS 7. It's important to mention that the company made collocations and payment of dividends applying paragraph 31 of IAS. Finally, the company with paragraph 46 and 48 by detailing how the cash is composed, as well as providing a management comment regarding the deposit available at the end of the period. Next, please.
Hi, I'm going to talk about the International Accounting Standard 8. Under paragraph 14 of IS 8, the entity shall change an accounting policy only if such change A is required by an AFRs or B leads the final statement to provide reliable and more relevant information about the effects of transaction. In 2019, the group applied the following standard and amendments for the first time for the annual report for the period beginning of January 1st, 2019. These are IFRS 16, leases, and IFRS 23, uncertainty regarding income tax treatments. Annual improvement to IFRS standard 2015 and 2017, the group had to change its accounting policy as a result of the adoption of IFRS 16. The other aforementioned modifications have not had an impact on the amounts of previous periods. The group applied the IFRS 16 retroactively from January 2019. However, the comparative period of 2018 has not been restated, as allowed by the transitory provision of the standard.
Okay, so here I'm gonna talk about the difference that we see before. This is the events after the reporting period. So the company complies with paragraphs 2 and 7 by reporting subsequent events in a note to the financial statement. The consolidated financial statement as of December 31 of 2019 were approved and authorized for issuance by the Board of Directors on April 9 of 2020. In this way, the entity reveals two important events that have occurred, such as the COVID-19 outbreak and the syndicated loan to term that happened in the months of March and April 2020, respectively. With regard to this event that occurred after the reporting period, so the company reveals the nature of this and show the uncertainty about the effects that this is going to have in the world, in the Peruvian economy, and in the international financial markets.
Okay, the company meets the definition of paragraph 73A of the standard, which is about the classes of property, plant, and equipment, and the measurement base to determine the gross carrying amount. The group The group's property, plant, and equipment accounts are recorded at acquisition cost net of accumulated depreciation and possible accumulated losses due to impairment of value. The company used two depreciation methods, a straight line and units produced, meaning units with long useful life, depreciation of assets directly. Related to the operation of the mine is calculated using the production units method, which is based on the economically recoverable reserve of the same mining unit.
Bueno, según NIC 12, que es impuesto a las ganancias, la empresa llega a cumplir con casi todas las revelaciones de esta norma, más dos, no se cumple con dos revelaciones que serían significativas para la empresa. En este caso es el párrafo 82, el cual nos dice que la empresa debe revelar información relevante sobre los activos financieros que van a ser utilizados a futuro. Y el párrafo 86 que nos dice que la empresa debe revelar la tasa efectiva del impuesto. Next, please. Bueno, como podemos ver en la nota 28A de los estados auditados, la empresa tiene actualmente en el 2019 $45 millones en activo diferido. Y en este cuadro, que es la nota 28B, se puede ver que la empresa muestra las ventas futuras que tiene la empresa Buenaventura, pero solo hasta el 2019. Lo cual es su evidencia para estos activos diferidos, pero como recomendación sería que la empresa aplique un cuadro de utilidades futuras para de acá a 5 años y un método de arrastre según el sistema A o B para que pueda decir cómo va a utilizar este activo diferido. Next, please. Y en cuanto a la tasa efectiva, acá podemos ver la conciliación de los gastos tributarios y la utilidad contable multiplicado por la tasa nominal, que en este caso es el 29.5%, pero no se revela la tasa efectiva, en la cual este es un hecho significativo que debería revelar la empresa para que así los usuarios que leen los estados financieros puedan tomar mejores decisiones. Next, please.
Okay, what is really important about this standard is that it mentions the financing cost and the interest rate must be presented as it is mentioned by Buenaventura in note 16, which is financial obligations. And as we can see, the applicable rate is 3% and the amount of which the rate will be applied is $2,500,000. Next, please.
Okay, IAS 37 talks about provisions, contingent liabilities, and contingent assets. So we have two paragraphs that company applies. The first one is the paragraph 87, where the company details what it refers to with general provision and provision for mine closure. The other paragraphs are 14 and 84, where the company discloses in the note in question the amount in books as the beginning of the period as well as the end of the same, in addition to increases in provisions. Given this, it can be stated that the mining company complies with paragraphs 14 and 84. Next, please.
Okay, now we are gonna talk about the intangibles, which is the international standard 38. The standard mentioned that the entity must present useful life of its intangibles, amortization methods, book value, and accumulated amortization. Also, they should show the amortization within operating costs. And indeed, Buenaventura present all this information in the income statement and in the note 2 and 12. Next, please.
Okay, en cuanto a la NIF 7, que son las revelaciones de los instrumentos financieros, la empresa cumple absolutamente con todas las revelaciones de esta norma. Next, please. para lo cual se puede hacer algunos comentarios en cuanto a sus activos financieros, que generalmente estos se miden al costo amortizado al inicio y posteriormente a valor razonable con cambios en ORI. Podemos ver acá en este cuadro, que es la nota 7A, que los activos financieros están basados en las cuentas por cobrar a terceros que están dentro de las cuentas por cobrar comerciales netas, el cual equivale a 31 millones de dólares del total, ¿no? En este caso no equivale ni a más del 0.1% del total. Y esto es debido, ¿por qué? Porque la empresa no se dedica a trabajar con instrumentos financieros, sino que su principal negocio es el proceso y la venta de minerales. Next, please. En cuanto a sus pasivos financieros, podemos ver acá que la empresa, todos sus pasivos financieros consta de obligaciones financieras, préstamos que se hace con varios diversos bancos, que en su totalidad llega a salir de 571 millones de dólares, el cual este sí es un monto significativo para la empresa porque equivale al 15% del total de activos, para lo cual la empresa tendrá que hacer una revelación más detallada. Next, please. En este caso podemos ver un ejemplo de un préstamo que se hizo el banco por 161 millones de dólares, el cual el banco hace todas las revelaciones según el párrafo 33 de la NIF 7, el cual le pide un análisis cuantitativo y cualitativo de los riesgos asociados a estos pasivos diferidos, como los riesgos de liquidez, riesgos de mercado y los riesgos de commodity. Next, please.
Okay, so now I'm going to talk about financial instruments. The company complies with the standard by disclosing the recognition of financial asset and liability. Also, according to the paragraph 4.1.1, it complies with classifying financial assets according to its business model and contractual term of cash flow. First, financial assets at amortized cost and financial assets at fair value through profit or loss applied to miscellaneous accounts receivable included in the caption trade miscellaneous account receivable net. Second, financial asset at fair value with changes in other comprehensive income generally apply to the caption derivative financial instrument of hedging. Finally, in note 7, it can be seen that the entity applies the expected credit prediction model for which the group recognizes a provision for all debt instruments that are not kept at fair value, to profit or lost.
At the start date of the lease, the group recognized the lease liabilities measured at the present value of the lease repayments that will be made during the lease term. The group applies the short-term lease recognition exception to its short-term leases of machinery and equipment without a renewal option. According to the principle of AS 17 leases, these liabilities, when measured at the present value of the remaining payment discount using an incremental interest rate of the lease of January 1st, 2019 of 5% per year, the effect of adopting AFS 16 is a follow like this. The group as lessor, leases is which the group doesn't not transfer substantially all the risks and benefits related to the ownership of an asset are classified of leases operational. Next, please. In conclusion, having carried out the respective analysis of the financial statement with a standard, is concluded that the company has complied for the most part with all account aspects. It's recommended that the company carry out more analysis in AS.A. 320 because there were 2 accounts that exceeded materiality and did not put the respective notes. Thanks.